Mizuho Director and Senior Analyst of Hardlines, Broadlines, and Consumer Internet, David Bellinger, and CNBC Senior Retail Reporter, Courtney Reagan, who's been following this for us. So, David, what's your reaction to the CEO pick?
Thanks for having me on today.
Thank you for coming
Look,
in.
it's a little disappointing to us because we actually ran an investor survey about a month ago, and 96% of investors told us they wanted an external hire, someone who could bring wholesale change, do it aggressively, and we just didn't get that today. So Michael Fidelki, he's been at Target for about 20 years now. He's actually an intern, worked his way up. So he has a great knowledge of the business. It just seems that the reaction we're getting today is that maybe he's not the ideal candidate to come in and do this so aggressively and turn the business quickly. So I think that's why you're seeing the reaction in the stock today.
So earlier I drew a comparison to Nike because Elliott Hill, the new CEO, was also an intern at Nike and worked his way up through a number of jobs in that company. And, you know, it's obviously a very different situation, but they're both retailers that are struggling to reclaim the glory days when they were cool, right? And the idea is bring in someone that knows the business really well and was there during that time and knows the special sauce of a Nike or a Target so that they can engineer that turnaround. Why couldn't that work?
It's definitely possible. And Target has a tremendous amount of potential upside. You can see the stock up 50% if they get things correctly. It's hard to go and pull that back, that 10, 20 year ago feel of Target. You've got a very different retail landscape today with Walmart has been very aggressive in their investments. They do a great job in grocery to get that frequency of order transactions. They have a great online business and marketplace. And then Target's definitely competing with the Amazons of the world as well. So that's where they've lacked the investment, the proper investment to catch up to these guys. And looking forward, it's definitely possible that they can get there. Just screens that'll be incredibly expensive and it'll take some time for them to actually get some results on the board.
Courtney, I'm curious what you're hearing about Target's challenges and how you see the competitive landscape right now.
Yeah, I mean, look, I echo what David has said. And obviously, Sarah, we spoke at length as well to the executives this quarter and have in the past. I think we know Fidelki well, and no one doubts, obviously, that he has a lot of skills. But we also know he's been there when some of these missteps have happened. And so I think everyone wonders, well, if he had been in that top seat, what if he had made different calls along the way? And to David's point, I mean, Target actually has done a lot when it comes to changing up their shipping and their distributions and being able to ship from store and really cutting down the cost of that last mile to catch up to Amazon. In many parts of the country, you can actually get your items ordered from Target very, very quickly, as quick or quicker than Amazon, particularly if it's filled from the store. Now, they don't have as much of the endless aisle that Amazon would have, so that's different. And then, Sarah, to the point that Fidelki made to you and to me and to many others that they want to get that or need to get that Target magic back, I mean, of course they do, right? Like, we all know that. And I think some of the disappointment might be with Fidelki is that he has held a lot of roles there. He's been the CFO. He's the current COO. He's worked in HR. We talked about his experience all the way down from an intern all the way up. But it's that merchant prince, someone that really knows merchandise and has that special touch, that sort of balance of art and science that everybody's looking for. I don't know if that person exists, to be honest, but yeah, I think everyone was hoping that they could find that person.
Yeah, merchant princess maybe they should be looking. The stock did bottom, David, at I don't know, around 9. It got down to 94 today, and interestingly has rebounded. At what point does it look too cheap or too hated for you?
Yeah, it's a great question. You have to look at I think the dividend yield will actually be a floor for this stock. You start to see that push 5 or 6%. But I would also say that I don't think Target's had its kitchen sink moment just yet. So you've had a new management coming in. Numbers haven't been slashed to a massive degree yet, but that poses risk for the back half. You've got the complexity of tariffs layering on top of this. So maybe you get some kind of revision downward in earnings, or even next year it turns out to be sort of a weak year, as this can tend to be pretty disruptive to earnings power as these wholesale changes start to take place. So that's what we're looking for, is sort of a bottoming in numbers, and then how quickly can they get sales growing again, get those comps back. And like Courtney said, a lot of that is merchandising and the heart of the stores, getting those back to operate better.